Hello, I'm George Kittah, financial strategist with Four Oaks Financial. Welcome to Market Moments with George. Please like and subscribe to get weekly notifications. In today's interconnected world, staying informed about global economic trends is more critical than ever. From Beijing to Washington, the decisions made by governments and financial institutions have far-reaching consequences. We must pay attention as these events shape our lives. What happens in China impacts the US and vice versa. Understanding these dynamics is crucial for investors, policymakers, and ordinary citizens alike. This essay delves into three pressing economic issues: retirement ages in the US and China, the US national debt, and the Federal Reserve's battle against inflation. By shedding light on these critical topics, we aim to provide you with the knowledge needed to navigate these uncertain economic times. Stay informed and stay ahead of the curve. The United States and China, two economic giants, are grappling with demographic challenges, particularly regarding retirement age. The US, with its aging population, maintains a retirement age of 67 for full Social Security benefits. This age, however, has sparked debate, with some advocating for an even later retirement to ensure the system's solvency. China, on the other hand, boasts a significantly lower retirement age. Men can retire as early as 60, while women enjoy an even earlier retirement age of 50 or 55, depending on their occupation. This discrepancy in retirement ages reflects the diverging demographic trends and social safety nets in these two nations. The US faces a shrinking workforce and a growing elderly population, putting a strain on Social Security and retirement programs. China, despite its massive population, also grapples with an aging workforce due to its former one-child policy. These demographic shifts have profound implications for economic growth and social stability. The US national debt has reached a staggering $33 trillion, a figure that should give every American pause. This mountain of debt, accumulated over decades, represents more than 120% of the nation's GDP, a ratio that raises serious concerns about long-term economic stability. This debt burden has significant consequences for the US economy. It can lead to higher interest rates, crowding out private investment, and stifling economic growth. Furthermore, servicing this debt consumes a growing portion of the federal budget, diverting resources from essential programs like education, infrastructure, and healthcare. While some argue that the US can sustain high debt levels due to its unique position as the world's reserve currency, this line of thinking is dangerous and unsustainable. Addressing the national debt requires responsible fiscal policies, including spending cuts and revenue increases to avert a potential economic crisis in the future. Federal Reserve versus inflation. Market reactions. The Federal Reserve, tasked with maintaining price stability, has been aggressively raising interest rates to combat soaring inflation. These rate hikes aim to cool down the economy by making borrowing more expensive, thereby reducing consumer spending and business investment. The market reaction to the Fed's actions has been mixed. While higher interest rates can curb inflation, they also increase the risk of an economic slowdown or recession. The stock market, often seen as a barometer of economic health, has experienced volatility as investors weigh the potential benefits and risks of the Fed's monetary policy tightening. Furthermore, rising interest rates have implications for the housing market, making mortgages more expensive and potentially cooling down home prices. The Federal Reserve's balancing act is delicate, and its success in taming inflation without triggering a recession remains uncertain. Economic factors. Your future depends on it. Understanding the economic forces at play, both domestically and globally, is crucial for securing our financial well-being. From the diverging retirement ages in the US and China to the looming US national debt crisis and the Federal Reserve's battle against inflation, these economic factors will continue to shape our lives in the years to come. By staying informed, we empower ourselves to make sound financial decisions advocate for responsible policies, and navigate the complexities of the global economy. Remember, knowledge is power, especially in today's uncertain economic landscape. Your future depends on it.
Take control of your financial future. Contact me today.